Okay. We're into the weekly analysis. We kind of bled the calls over. I apologize for that. But what we're talking about is how to trade these weekly order blocks. This is a trade that most people, we talked about this thing forever, right? We talked about the chalk. We looked at this thing on the 4-hour a while back. We've been following GN because GN gives out a boatload of pips. We had the breaker structure to the upside. We had it come back down and break structure to the bottom. We knew that it was going to come up to this level and sell down, right? We all expected that. Last week, we had that bearish order block. We had the green bar that bought into the order block. This was a straight shooter straight down. Who took this trade?
I didn't.
Nobody did, because this wasn't on the weekly order block, right? This wasn't on your weekly order block list.
Nope.
And it wasn't on your weekly order block list because your order block happened 2 weeks ago. But we're trading on the higher time frame, which means this order block is going to be good for more than 1 week. It's going to play out. You saw it too. So that's good. I don't bring this to you guys as a group because to me, this is more advanced than what we have to do to make our money, right? This is a more advanced move. I know it bought back up into the order block and I knew it was going to sell. Look, yo, I didn't know it was going to sell 700 freaking pips, but I knew it was going to sell. This thing dropped 700 pips. 700 pips. So let me tie this into the question you're asking me. I look at more than what I bring to you guys' attention. For instance, I'm going to trade this tomorrow just because Ray Charles can see this thing is going to retrace, right? We know that it's going to retrace because it moves 785 pips in 1 week. That retracement on Sunday that happens tomorrow that's going to be a 10% trade. I'm going to make 10% on it. If I go up to the monthly, man, this retracement tap right into this monthly OB. Bing. Here's a low. Here's a higher low. What are the chances of this being a higher low? It's probably pretty darn good. I'm buying it. I'm buying it when the market opens. You know, this might be one of them trades where I might have to suck that spread up. Y'all know the spread for GN be high, you know, but you know, I don't want to get y'all into doing you know, flip stuff, but I want to understand, I want you guys to understand what we're looking for and what should be like trigger moves for y'all. If a pair moves 500, 600, 700 pips in a week, y'all know the market ain't going straight down. It's going to retrace.
Todd.
You said what?
Yeah, Sharad speaking here, Mountain View.
Hey, how you
all good, sir, yourself?
You doing well.
Thank you. Can you just now mark up that 700 move that you're going to do a retracement on, please?
Okay, yes, sir. All right, what I'm going to do is take this weekly candle, right? This weekly candle, if I measure the move that it made last week, $799 pips. If I go wick to wick, it's over 800 pip move last week. So as a trader, you know, ain't nothing moving 800 pips without pulling back, right? I mean, it can happen, but it needs to be news driven that it moves 800 pips without pulling back. So this move 800 pips is going to pull back. Let me mark up the golden zone. So from here to here, back to the golden zone, 386 pips. If we can't figure out how to make our percentage in 386 pips, we'll probably never figure it out. 386 pips that this thing needs to travel back to the golden zone.
Thanks for that, sir.
Yeah, this is a great trading opportunity. And all we have to do is be present enough, right? We're anticipating this already. All we have to do is watch for what, guys? What do we want to see?
A bullish order block.
On what time frame?
The 4-hour
4
time frame.
hour. 4
Okay,
hour.
so we'll be waiting on the 4 hour. Now, there is a bullish order block already, right? But you want to see the new week start off with the bullish order block. Now, let me give you a hint for this. This probably isn't going to be another bullish order block to start off the week. I mean, it moved down all those pips. What you're going to probably have to do, what you'll be better off doing, is setting a structure break. Like this should pull back, then it needs to break structure, right? Does everybody get that?
Got it. Got it.
So like any other order block, it's going to pull back, then it's going to break structure. At that point, you can wait for a pullback to get into the trade and push up, or you can wait for it to, it might pull back and bounce off these moving averages. And when it pulls back, you can get into the trade to take it up. Y'all tracking? Everybody understand that? Every one of us should have entry criteria, whether it's a break of structure, whether it's a tap in, all that stuff is going to come into play when it comes to finding your entry into this trade. But we already know that this trade is going to go up in a pretty good amount of pips, probably 385, 400 pips. If we're anticipating that type of a move, we have to kind of mark up our charts, like whether you have to drop down, you know, everybody whose name is not Selena, to find structure points that you're comfortable with seeing this thing break, right? So if I drop down to this 2 hour chart, maybe I need to see it break this structure, right? If I'm on a 1 hour chart, maybe I want it to break these moving averages, come back and retest the moving averages, and then I'm getting in for the up move. There is no wrong answer, but you have to have your criteria and be solid with your criteria, right? Maybe it goes up, comes down and gives you a double bottom and goes up. All of that is in play. You have to find your entry method as a trader and trust what you see from that point on. Everybody tracking?
Yes.
Okay.
Yes.
So to go back to the question that Selena asked me, do I look for other things? Yes, I look for all of those things. I look for everything that I ever talk about to you guys on the trade. I look at where we are as opposed to my moving averages. If we remember, do y'all remember this huge move? You know, it was right after that woman said that she was going to give them a tax break. The price crashed. They intervened. This shot up a record number of pips. If you throw a fib on this move from that low to the high, it pulled right back into your golden zone, right? So maybe it just bounces and continues to push higher. It's a spot that we could have marked up a while back. If you look over here, there's an order block right here. It tapped right into that order block. So for you supply and demand traders, boom, came right down to the zone, bing. It might get up out of here, right? Whatever, whatever you guys need to see via confluence, via reasoning why this thing is going to buy, other than me telling you, hey man, it moved, it went down 700 pips, it's going to go back up. It tapped into a zone as well. That's your confluence. It went to the golden zone on the Fibonacci. There's another piece of confluence. I mean, you have 1,000 different reasons just to be able to hop in the trade, and take it to the upside just based off of what I just told you, right? And if you're trading based off what I just told you with a Fibonacci, your stop loss could be way down here. Maybe you have 100 pip stop loss or whatever. And you think, oh, 100 pip stop loss is just too much. No, it ain't. Get in the trade. Get in the trade, because we all know that we can drop down to the 15-minute once the trade starts going in our direction, and we can get a better entry the same way I showed you on the GN or the GA trade a minute ago. We just want to get in the trade. We can always get a re-entry with a better lot size. Now, just because we're anticipating this trade buying, we still have to wait for it to actually buy. Once you see it buying, you get in the trade and you make your money. Yes, ma'am. Leandra? Or you were just, maybe you didn't have anything. All right. So the interest rate.
What I said.
What'd you say? Did you have a question, or were you just?
Yeah, I was speaking. I said that someone asked me a question this week saying, why did the GDP pairs sell if they had interest rate hikes? Because obviously currencies are meant to go higher if they have an interest rate hike. Just like
Okay. That's a great question.
The US dollar had an interest rate hike and it sold firstly, but then it started to buy I think the next day.
Right.
But yeah,
so
that question I thought I'll just ask you.
Well, there are probably a number of reasons, but if you just look at the technicals on this chart, I mean, it has to pull back. It can't go straight up. This went straight up. It started pulling back. It just pulled back. Now it's going to buy. But another thing, just because you raise the interest rates, the expected amount, the market could already have that priced in.
And
right. But I think it's more the first thing I said, which it needed to pull back first. It already shot up all these pips. It shot up like 1,400 pips this week. Remember that? Or 1,700 pips.
Mm-hmm.
It had to pull back.
Yeah, that's what I said. I said it's got to pull back to the 78.6. If we do like a fib, I'm sure it'll be like to the 78.6, because banks are not going to want to buy it at a premium rate. They want it at a discounted rate. And I think that's what Alicia was trying to get her head around earlier when you were saying you sell it before you buy it on the weekly chart. Yes. Even though it's a bullish order block, you need to sell it before you buy it, because no bank is going to want anything at a premium rate. They want everything at a discounted rate. Like when you go to the shops, you don't want anything for full price. But when you see a sell sign, say 70% off or 80% off something that's £100, you're getting it to next to nothing. So everyone's going to want that. Everyone's going to want that sale. So
you need to talk to the girls that want the Cartier, because they always want you to buy it at 100%. They don't want you to buy it on sale.
You were buying at the 100%, trust me. Anyway, but what I was saying is, you need to get it at a discounted rate, and that's why if it's a bullish order block, you're going to want to sell it down first to get also a better entry for yourself, and the banks are going to want, because of smart money and institutions are going to want a better rate. They don't want anything full price. They're cheap as well.
I agree.
Why do you think they use our money in these markets? They don't use their own money.
That's 100% facts. Does everybody see though? I mean, the goal is to have everybody to be able to trade one of these setups every week. I'm not trying to discourage you from finding your own style. Maybe your style is not as a swing trader, but this to me is very low maintenance. Most of these trades, you can make your money the first day that it moves. You don't have to be in this 3 or 4 days. You can make your money that day, 16 hours, 15 hours. You know, we're talking about these moves. Make your money, then go trade whatever style that you're trying to trade. I'm not trying to discourage you from figuring out your own style. All I'm trying to say is, hey guys, I found a system that works. All we have to do is trade it, and you can still work on your personal trade system. You know what I'm saying? This system will allow you to get money now though, while you work on your personal trade system. All right. So anyhow, I don't want to beat, a dead horse, but I'm sitting on this trade setup. I love this trade setup. This will be a trade that I'm looking to take this week. There are a couple of other setups. I'll make sure that I went through and found Monk a setup, because I know she likes to trade these crazy pairs. So silver is set up for a bullish move. I would expect a pullback first. Just mark that order block up. I would sell it, and then I would buy it up the same way. I mean, I trade these order blocks the same way, guys. Like, if it's a bullish order block, I'm always going to look for the sell first and then the buy up. If it's a bearish order block, I'm going to look for a pullback, a buy up before the sell down. Elfie, your setup is GN. That's your setup, GN, Elfie, GN. You can buy all the handbags you need after that trade setup. All right, gold, same thing. The only thing that you don't want, GN, you don't want the big moves, huh? Again, the pullback, then the buy up. Make sure that when we start trading these pair, you always pay attention to the moving averages, because this is where your turbulence and maybe even your turnarounds start to happen. So anytime that you're looking to trade one of these pair with the moving averages, always pay attention to make sure that you don't get turned around. Okay, so let's talk about the spread for GN. If you have to hold that trade over the New York session, it's going to be an extremely high spread, right? But this trade this trade happens overnight. And if you're up 8%, who cares what the spread is? You're up 8%. When the spread happens, it might show that you're up 2%. Okay, 800 spread, you up 8%. Again, you'll show that you're up 200 or 2% instead of 8%. You're up. Once the spread is over, the trade will resume. I mean, they're going to charge you what is the fee that they charge you for holding the trade? The spread only matters when you're negative or when you're a little bit up. If you're up all those percent, it's not going to matter. You're not going to go from 8% up to 10% down. That's not how it works. The swap fee, you're going to pay a swap fee though, but pay the swap fee. The trade is going in your direction. We just seem to worry about the wrong stuff. That's not the right thing to worry about.
Todd, I have a question.
Sure. What's the question?
You talked about the MA. Can you elaborate a little bit more on it when you said pay attention to it? I see the crossover.
Okay, so let's
Good.
let's talk about this. You see how this trade crossed over the moving average?
Yes.
It gives you a bearish order block.
Yes.
If you think about this, we broke these highs over here. This pullback is probably just going to pull back to the moving average and then go up.
Okay.
It's probably not pulling back past the moving average. Now it can, but chances are it's going to bounce from the moving average. You know, kind of like it bounced here from the moving average.
Okay.
If the pair is going up, it's just going to come down to touch the moving average and bounce. You know, the same way that on the other side of this trade, when this pair was falling, you get the bullish order block and it goes up to the moving average and then it falls. It goes up to the moving average and it falls.
Falls. Okay.
It goes up past the moving average, but it falls. To the moving average here, falls. So whenever you're trading a pair that's approaching this moving average, if you get a bullish order block right here, you can only safely trade this to the moving average because it's a downtrend. Your moving average will keep you on the right side of the action. So if I'm selling this, I'm going to buy this up first and I'm going to sell it safely to the moving average. I don't feel comfortable selling this blindly, trying to sell it past the moving average. That's how you wake up and you're a severe drawdown because the trade reversed on you. You weren't paying attention to where the moving average. That's why a lot of times on my charts, you'll see these lines and they'll be at the moving average because I don't want any surprises. And if I'm down on the 4-hour time frame or on the 2-hour time frame, I need to understand that, oh man, there's a moving average around here, right?
Gotcha.
So that's why I'll put lines on these charts. So I can understand where this weekly moving average is, no matter what time frame I'm on.
Okay. Gotcha. Thank you. Thank you.
No problem. Any other questions?
Sorry, when did you mark up the moving average, the red line?
I mean, I mean, maybe last week.
Maybe.
Yeah, because I needed to know where the moving average was. So it was probably last week during the week. I didn't end up taking this trade because I made 10% on GU. So, you know, for those of you who got busted up, you know, last week, even though you shouldn't have got busted up last week, just always keep in mind that NFP is going to be the hardest week to make your money. NFP, right? I'm laughing at you, Sweet Pea. All right, go over AUD USD. AU. You can disagree all you want to. I'm just telling you what I know, not what I think. The market moves more shifty during those weeks, and it's a lot of news. So you can easily get caught on the wrong side of a move. I don't worry about it because I pretty much am very comfortable with what I'm doing. But for the people who are newer, it's going to be more difficult. But let me see AU. A Sweet Pea, I'm going to affectionately say that generally speaking, I would trade whatever I suggest trading. Let me see, AU. How come I don't have it?
That is Sweet Pea's pair, okay?
You said what?
That's Sweet Pea's pair.
Yeah, I'm with you. I'm with you. And there's nothing wrong with this pair. Sweet Pea.
And I think Sweet Pea is a big, I think Sweet Pea, correct me if I'm wrong, but I think Sweet Pea's a beginner, a newbie. To the, to
I
the,
don't. I think Sweet Pea she's been having I think more success.
okay.
So I think this pair is probably going to go up with the rest of the pair. I think the dollar is going to sell a little bit, and I would really base this more off of pairs like GU and EU. You see what EU looks like, or NU. Yeah, so all of these pair are going to go up as the dollar cools a little bit. I think there are a lot better trade setups than this AU. So if you want to take this trade, let me throw a fib on this, Jim. Okay, a couple of things I guess to like about this setup is you can clearly see that this is a swing low here. I need to go up a time frame to run my fib on this jank. Okay, this is about as high as I would be comfortable with taking this trade. I think there's plenty of room here, but if it drops down here, it's about 262 pips. Again, you got moving averages that you're crossing. This will be my take profit though. I would trade it to this zone until I figured out if it was going to go much higher than this. You can probably use about a 40 pip stop loss. They give you about a 7%. No, it's not going to be 7%. It's going to be 6% trade. But two positions to give you 12% in this trade setup, in my opinion. You tracking that, Sweet Pea? Yes, I would look for this to pull back. There's an imbalance right here on the 2 hour. Yeah, I would look for it to pull back to this area, imbalance and go up. It's a decent little trade setup. Okay, sticking to the script with the weekly joints. In my opinion, the weekly trades offer you more pippage. Okay, this is basically the same as we talked about for the GN. I would buy it up before I would expect it to push down. Again, pay attention to your moving averages once you start getting the sell down. Maybe this buys up and never comes down. You know, maybe it buys up 300, 400 pips. This is 382 pips, 386 pips to this level. There are plenty of room to buy up, guy. Like this, these G pairs should make your week, in my opinion. Same thing with GBP CAD. It's going to buy up first. GJ is going to buy up first. For those of you who are in GJ, Friday you got paid. Made you a little bread. You know, I really like all the JPY pairs to keep going to the top side, to be honest. Selena, you have this marked as a sell?
Yes, I do.
Yeah, I know this is not going to sell. It's going to bounce. So I wouldn't be surprised if you just get.
Well, I think I put a note on that too, because I wasn't sure, because there's that bullish order block to the left. So I think I didn't color code that one
Bullish
because I
order
feel
block
like
to
it
the
was
left.
gonna right there. You got
Oh,
that,
you're right here.
that-
Yeah.
Yeah. So I felt like it was
definitely-
going.
I think
Yeah,
every
I did.
JPY pair, with the exception of Chef JPY, I think is going to buy.
Right. So I think it's going to tap back into that order block and buy back up. But I just put it on there. So I started doing the charts different. If I don't color code it, it's because it's somewhere near an order block,
Okay.
another order block.
I agree that I think this is going to buy. And that's 428 pips too. Man, these JPY pairs are, British pound pairs are going to pay well this week if you're interested. This is going to sell down before it goes back up if it goes up. If you look at this monthly, it looks like it tapped into the monthly order block. So I do think that it could push down. But if you pay attention to these moving averages on the monthly, it could have just touched down and this might push to the upside. Selena, did you, what trade were you looking at for the monthly trade?
For the monthly, oh gosh, Felicia, which one was it? I'm not at the house. It was NZD. What was it, Felicia?
NVD JPY.
Yes.
Okay. Yeah, I saw that trade too, but I like this one a little better, but it's all good. This is my trade that I would do for the month. You know, you can already see it already tapped in, but Euro Chef is going to buy up. We'll watch it through these moving averages, even though I think it will end up pushing through the moving averages. Are y'all already got in this for the buy?
I was trying to sell it down, and then it got picked up, but I didn't get back in for the buy yet.
Yeah, so
I don't know about Felicia.
It to me, it's buying. I think all these JPY pair are going to buy, but yeah, this is, you can definitely see the wick. I don't think you're going to get any of the tap in. I think you're going to have to find your entry for this bad boy right now. Right now.
I'm in it, well, I guess for the sale, or was
Are
based on
you still
time
in it?
saying,
Are you still
no,
in it?
you were saying depending on what order block we get is how we would go about it. So that next day we got the bearish order block
Okay.
on the daily. So that's why.
Okay, so did you, are you still in it for the sale? This was the bearish order block you got. It
Yeah.
sold right down to the moving averages in balance.
Yeah.
This is why you watch out at the moving average. But it did exactly what she thought it was gonna do. It came right close to the, this would have been my order block entry, but you got a few pips right to it. So yeah, I think the JPY pairs next week are looking for a bounce. EA, let me see EA. Oh, rubbish. EA is rubbish. No, I'm not, it ain't rubbish. So this was a trade that I called out last week. I don't know if you knew about it, Leandra, but there was a stop run on this daily chart that I called out last week.
You told me about it 2 weeks ago.
Well, I might have told you about it 2 weeks ago, but I called it out last week.
So what does the stop run mean? Because you called out for a sell. So I
Well,
sold it,
then
it went into profit, and then it went out of profit,
okay,
and then now it's in profit again.
Okay,
So
it's selling. You see how this stop run here? Then it came back up to the 78% right here. It's selling off. You got a bearish order block on the weekly.
Mhm.
If you look at the monthly, all price did was come tap back into this monthly order block.
This bearish order block on the monthly.
Yep, it tapped in, it's gonna sell down. We had broken these lows, it broke a low, it came back up, tapped in, you can take this trade down to these lows, in my opinion.
It's a long-term trade.
Yes. Gonna cook like hot grease. You got a bearish weekly, you got a bearish daily. Listen, man, please don't come back on this call on the week saying you didn't make no money.
No, for this one, I did.
No, I'm not talking to you in particular. We have 19 mojos on this call. What I'm saying is, we've talked about a number of trade setups. Any number of these trade setups. You can take these to the bank, man. Like, this is gonna cook. EA is gonna cook. GN is gonna cook. Like, man, make your money. Make your money. This is a good week to make your money. It's the week after NFP. Last week was probably one of the more difficult weeks that you're going to trade to make money because of all the news. This week, make your money. It's not hard. It's going to be there. It's going to be available for everybody. Any questions?
Yeah, I've got a question.
Yeah, go ahead.
How do the elections affect the market? And is it just election results on Tuesday?
Well, yeah, I think for the most part, there will be some volatile movements in the dollar, right? And I expect a lot of conservatives to win in the elections, but guys,
Is it like state elections, not presidential election?
There are congressional elections,
What's that mean?
as well as local elections. Well, it's not the presidential election; it's the Senate. But this is what I want you to pay attention to. Notice I did not refer anybody on this call to any USD pair. I know Sweet Pea asked about it, but I didn't refer anybody to USD pairs. There's a reason behind that. There are easier ways for you to make your money this week. Why would you trade the election? Message. Trade.
Question, Leandra.
Hey, Sean.
Hey, what's up? The conservatives are likely going to take control of both chambers of Congress, and the US 30 is probably going to like it, and it's probably going to go up.
Okay, thank you.
But why
I hear you. Why do it? There are easier trades. I got it. So, if you ain't comfortable with all that, then don't do it. But that's the answer to her question, is all I'm saying.
So it affects the indices in a positive way if the
It's going to affect them one way or the other.
you say if the Conservative win the majority of the party. Is that what you're talking about?
Yes.
Okay, not the Republicans, is that right?
Markets are going to like that if they win, if they can take back both houses of Congress.
Okay, lovely. Thank you.
You're welcome.
Any other questions? Awesome. Yeah, they are bullish. Alicia, if you listen to what I said on the call, you'll be finished trading by Monday. You hear me? Like,
We all will.
yeah, if you listen, you'll be finished trading on Monday. But let's make this loop and let's execute our trading plans. I'll see y'all this week out on the trading fields.
Thank you, Todd.
Thanks, Todd.
Thank you very much, sir. Bye.
All right, y'all have a good one.
Thank you.
You too.
Thank you, Todd.